Good evening, everyone. Welcome to the third seminar in our Real Estate Why series, where we're going to be talking all about real estate investing. My name is Jessica, and I'm a mortgage broker with DLC Harmony Mortgage Group. And I am joined this evening by the lovely Michele Cummins, who is a realtor extraordinaire with the Cummins Real Estate Group, the fantastic Brandon Kirk, who is our money man with Primerica, and Ishpreet, he's the whiz of real estate legal and will be the one to whip us into shape and make sure we all know what we're signing. Four of us are so excited to have you here this evening, and we'll try and maximize the time you spend with us this evening and make sure to give you the very best information to get you into the game of real estate investing. So as you can see, we have an agenda to keep us on track this evening. First, we're going to be taking you through our wicked presentation, which is loaded with information, and then it'll be question time. Make sure you note them down or stick them into the chat so we can make sure we get to them at the end. And then lastly, we'll be doing a $100 giveaway for a gift card to the store of the winner's choice. Michele will be running us through our 6 steps, and then we will get this show started.
So the first step that we're going to go through is getting your money in order. The second step is getting pre-approved. So important. Third step, connect with a realtor. Fourth step is the live deal. Now what do? Fifth step, complete the deal. And the sixth and final step, maintain and protect your investment. So you want to, yeah. Brandon, go ahead.
Yeah, Michele, thank you for turning it over. So when it comes to investing, we're talking about money, dollars, dojis. So that's where we have to be able to accumulate and have money to invest with. So when it comes to investing, you want to do a testament of assets, be able to see where your net worth and where your investable assets are sitting and figure out your personal resources for investing. So with this here, people that are on our Facebook Live, people we have here today, who would like to know by a show of hands where they're at? When I say, show me the money, you show me where you're at. How great would that be, right? So this is where we look at your usable assets for your down payment and find out exactly what is available for down payment, property transfer tax, and your lawyer's fees, and find out what your true purchase point is. And then from there, we find out, is that purchase point going to be able to be sufficient for the investment property you're looking to purchase? If it is, amazing, you're on to step 2. If it's not, that's where you stick with me a little further and we figure out a saving strategy through your registered and non-registered personal and business assets that we can use to be able to get you to where you need to be when it comes to your savings and for your purchasing power. Once you're all organized there, we move on to step 2. And that's going to be getting pre-approved with Jessica Oates, our mortgage broker.
Thank you, Brandon. So one of the first steps to buying real estate is to make sure you're pre-approved and can afford the property you're looking at buying. This is done by completing an application, which is then reviewed, and then supplying income documents to verify your income and employment. These documents can vary depending on whether you're employed or self-employed. So what documents do you need? For a standard employed person, I'll be asking you for letter of employment, your most recent pay stub, and your 2 most recent years of T4 and notice of assessment documents. This is to show that you are lawfully employed and that you do have a regular income coming in that can be proven by the letter of employment. As there are different types of self-employed people, the documents I ask for would differ depending on how you pay yourself. No matter which way you pay yourself, though, I will ask you for the last 2 years of your T1 generals in full. These do have to be accounted prepared. I will also ask you for the last 2 years of notice of assessment from the CRA, which shows taxes owed or due. And if it does show taxes that were owed, we need to see proof of payment. I also ask you for your 2 most recent fiscal year business financial statements, copy of your business license for the current and previous year, and your notice of articles. This shows us who the shareholders of your company are. Next, I'll ask you if you own any other properties. If you already are in the investment game of real estate, you will have to supply current mortgage statements and current leases for each individual property you own. Lastly, you will have to show proof of down payment. This is done by providing a 90-day statement showing proof of the funds. And this can be held in your bank account, your business bank account, wherever it's coming from. We just need to have proof of a 90-day statement up front. And if there's large deposits being made, we just need a disclaimer or an explanation for those deposits to provide to the lender. Thing to keep in mind when investing in real estate is you may run into situations where you fall outside the scope of standard lending. This can happen when you own too many properties, as most lenders have a 4 or 5 door limit. In this case, we would move to alternative lenders. This is an excellent option for someone who's wanting to purchase a whole bunch of rental properties, as they do have looser rules and regulations about how many properties you may have. With this, you may end up looking at a little bit higher of a rate, but the lenders can be very flexible, and this allows you to continue purchasing and renting out the properties, one after the other, and the restrictions are much, much less. So we would speak about this probably during the pre-approval stage if you did own too many properties. So next, we'll be hearing from Michele about the steps to be taken with a realtor when it is time to go shopping. Michele, take it away.
Thank you so much, Jessica. That's a lot of fun stuff. Oh, paperwork, but it's a necessary thing, isn't it? So you want to invest in real estate, and I am here as your realtor, hopefully, to unlock your real estate potential. A licensed realtor for 19 years and an investor myself, I am passionate about this. So 6 reasons to invest. First one is the passive rental income that you get. Secondly, early retirement freedom. Third, tax advantages. Fourth, shelter from the market fluctuations that we always have. And 5, easy to finance and leverage. And the 6th and final, hedging against inflation, that horrible thing. And then we go on to SMART goals. Before you do anything successful, you want to be prepared and you want to have SMART goals. That's an acronym for S specific. So make sure your goals are focused and identify a tangible outcome. Without the specifics, your goal runs the risk of being too vague to achieve. Being more specific helps you identify what you want to achieve. You should also identify what resources you are going to leverage in order to achieve that success. M is for measurable. So you should have some clear definition of success. This will help you to evaluate and achieve and also progress and get that from your real estate investing. So this component often answers how much or how many, and how it highlights what you'll know, what you need to know to achieve that goal. The A is for attainable. Your goals should be challenging, but still reasonable to achieve. Reflecting on this component can reveal any potential barriers that you may need to overcome to realize success. Outline the steps you're planning to take to achieve your goal. R is for relevant. So this is about getting real with yourself and ensuring what you're trying to achieve is worthwhile to you. Determining if it's aligned with your values, your family, and if it is priority focus for you. This helps you answer the why. Why are you investing? And then T, time bound. Every goal needs a target date, something that motivates you to really apply the focus and discipline necessary to achieve it. This answers when. It's important to set a realistic time frame to achieve your goal to ensure you don't get discouraged and you keep on moving forward with success. So with that, we move on to where are you at personally? So are you a beginner investor or are you a seasoned investor? What are your life goals, your hobbies? Where do you like to vacation maybe? What are your interests? Think about those things before you start investing. It all starts with your primary residence, that initial 5% down that you need, and it snowballs from there. So the hardest part is coming up with the initial deposit. So if you have to partner with somebody you trust, partner with them. Otherwise, if you've saved up your 5% for your first primary residence, that should be your first investment. And you can rent it out, maybe Airbnb it when you don't stay there, stay in a trailer. You can rent rooms out to students. You can bring in an exchange student. If there's a suite, rent out the higher valued part. Maybe that's the upstairs. Put in that Airbnb. Do what you can with what you have in the beginning. Once your equity grows enough to borrow up to 80% of the newfound equity a few years later, or like the last couple of years, it's gone up like 100% in our area, take out a HELOC. So that's a home equity line of credit to purchase your second property. And that way you're not even using any of your extra money. You're using the equity in your primary residence. And that's how it snowballs from there. Now you're allowed 2 insured mortgages in Canada with only 5% down before you have to put 20% down on further purchases. And any purchase though, you should know whether it's your first one, your second purchase or more, if it's over $1 million, you do have to put 20% down anyways. So try and find your first 2 properties under that $1 million mark if you can. And then we have what type of real estate to invest in. So there's many you can think of, many I could think of, but where do you start? That's why I said, what's your goals? What are you personally needing out of it? So is it a vacation? Do you love vacationing? Maybe it's a vacation property that you short-term rental. And if you like fishing, go to the ocean, maybe mountains, skiing, choose kind of what you like to do, because that will help you enjoy it and it's an investment. And then there's flipping for a quick turnaround. So flipping for a quick turnaround, you got to be careful with this one. You got to be in the right market for it, an upward market and not a downward market. You want to have a team of specialists also and service providers on call for you. And you want the turnaround to be fast as possible. You want to get it back on the market. Typically, you're waiting at least 3 months from listing a property to completion day. And there's costs in getting the mortgage, the taxes, the holding costs, the real estate commission, the lawyer fees, as well as capital gains. So you want to check your figures over and over again before going into flipping. And then third, there's pre-sale notes. I mean, you can buy pre-sales and assign them. So you got to be careful lately. And Ishpreet could attest to this, that when you're buying pre-sales right now, the developers are putting into the contract a price adjustment clause. And without getting into all the details, if the building construction and pricing index rises by more than 4%, the developer has the right to raise the price by the amount over that 4%. So be careful there as well. Most charge you big time for assigning the contract. But if your realtor has a good relationship with the developer or the sales staff, a lot of times you can get that minimized or even waived completely. And they can range from 1% to 3% or more, which ends up eating away at your profits. So be careful about that with pre-selling, knowing that you want to assign it. And then next, we've got long-term tenant. Okay, this is the one most people think of. So with long-term tenancy, you want to hire a good property manager to place the tenant because they do the credit checks, the criminal record checks. And then you can manage it yourself to save some money if it's close to you or if it's new construction and there's not a lot of maintenance. So think about that. But with the property manager, they're there for emergencies and all of that, but it does eat away at your cash flow. My suggestion is always do a lease of some sort in the beginning, whether it's 6 months or a year, because if the tenant doesn't end up being a good tenant, you don't have to grant an extension. You can get rid of them. And right now, the BC Tenancy Act is all about tenancy rights and not much about landlord rights. So be careful when it comes to this. But if they're great tenants, then you can actually just let it roll into a month-to-month after the lease ends. And that way it secures you from getting tenants that also are just hopping from one place to another and, you know, get rid of that riffraff. So the next one, commercial. So whether it's land in a building or land only or industrial, commercial investing is a great way to get a good cap rate and ROI. If the tenant, because one big thing is the triple net. If you don't know about triple net, all the expenses, including property taxes, your insurance, the mortgage interest and mortgage payment, any garbage maybe pickup, snow removal, city fees, all those fees that annually can go up at any point, the triple net lease is over and above the base lease. So that protects you from having to pay it. The tenant agrees to pay it. And then you can also do an escalating base rent. So you can escalate the base rent every year to go up, speculating what the inflation is going to be. So it's a great way if you have 20 to 35% to put down, because you do have to have more to put down on commercial. So that is about that. And then I wanted to also talk about different ways maybe to invest. There are a few different ways. So speculation, let's talk about that. So what's happening in the area? Maybe there's a university coming and there's going to be new students and you want to rent out to student housing. Or maybe the Langley project, the SkyTrain that's coming up to 203rd Street. It's a great area to right now purchase a pre-sale in Langley, speculating that they will bring the SkyTrain there. Or maybe Sasquatch Mountain used to be Hemlock. So that is going to be the next Whistler. It has a $2.5 billion project in the works, and the government has already approved $1.5 5 billion of that in funding. Or maybe the new 200K plan that's in Abbotsford near Mill Lake is the Seven Oaks Mall. It could be any of those things. So that's speculating. It's not there now, and the prices are lower now, but once those things come, the value raises. So be careful with speculating though, because if your speculation doesn't happen, then you could have a flop on your hands. So be careful. But if it does come out good, it's like a gold mine. So that's a good one. And then we've got investment for different ways to invest. So you've got the investment for retirement. Myself, not having a retirement plan, I invest in real estate and stocks, other ways, many different ways, but mostly real estate, obviously, from what I do, because that's my retirement plan. Cash flow, ROI, equity growth, which we are really known for here in the Lower Mainland. So that's the different ways to invest. And then we want to look at choosing your target location. So I talked a little bit about that in speculation, but let's say you want to buy in the city, but it's a city worker, but it's for family. You want to invest just outside of the city because prices are lower, but you want to buy a property that a family would like to live in, or maybe you want to rent to students. So with students, you want to be close to restaurants, close walking distance to shopping. They don't care about really the size. They're working students, or maybe a single person, like a single male, are great tenants. Always pay on time and they never bother you. Or maybe somebody on a pension. It's a given, you know, for sure that rent's going to be in there every month. So there's a lot of different people who you're going to rent to and the target location that your tenant wants. So you got to marry the two together: the property, the location, and the tenants or that you're wanting for that location. So that's on where to buy and who to your target tenant is. So as I said, in the Lower Mainland, we are known more for our equity growth rather than the cash flow. And with that, I wanted to share some of my personal investments with you, but I'm not going to go into detail. If you want further information on that, I am happy to walk you through it. But some of my personal true life real estate examples are my primary residence, of course, and I got a HELOC on it last year, of course, because equity went up of 300K, and it's now my emergency fund. Or my beach house in Oregon that I short-term rental through a vacation property management company. I bought it in 2019 for $550, and now it's worth $1.3 million, and I have not done any upgrades to it but a new fence and deck, and it's paid for itself in short-term rentals even after my 30% management fees and maintenance. So, and I get to enjoy it with my family and vacation there. I got 2 new condos to long-term tenants for my retirement plan, or my Vancouver City condo, which I Airbnb, and within 3 months of my first 3 months of booking on Airbnb, I got $60,000 of rentals. I just bought it last year for $815, and it's actually over $1 million already. Or my contract for 2 pre-sales. And so what I do is I buy 2 pre-sales in the same building, and before it completes, I assign one of them, and that pays for, it returns my deposit for the first one, plus I get profit out of it. So in essence, I've put 0 down on the one that I'm keeping and renting out. So I like doing that every couple of years, just getting a couple pre-sales in my back pocket. Or my Sasquatch ski and mountain bike chalet that is up next, which I'm going to short-term rental. So I've got so many great ideas, and there's so many great ways of investing in real estate. Thank you so much for coming to our seminar today. And with that, I want to hand it off to our next speaker.
Thank you, Michele. So much great information. So you've spoken with your realtor, you found the property that you love, you've made an offer, it's been accepted. Now what? Well, from the mortgage broker's perspective, things happen very quick once we hit this step. Your realtor will send off all the accepted offer documentation. I submit this to the lender to make the deal live. Next, I will submit all the required documents, and if there's any other items that they're asking to verify, we go back and forth a few times, getting everything that they need sent over. One other item that they most likely will ask for will be an appraisal and a market rent assessment. So let's talk a little bit about this. An appraisal is important as it confirms the value of the home and being directly compared to other properties in the same area or current market. A market rent assessment is done to confirm what the home or unit can be rented for compared to other properties in the area. This is important. The lender needs to make sure that the return on the property is comparable to the estimated rent amounts we have entered into the original application and used in our calculations for the total debt service numbers. Normally, the original number that we enter into the application is an estimate, either given by your realtor or someone you know in the area that may be renting out. And we kind of work that based off their knowledge, which is why it is important to work with a realtor that knows the area, knows the properties, maybe lives in the area. We base this number low normally, as we do not want to overestimate in case market rent comes back low, but sometimes it comes back higher, which actually ends up helping the application and gives it more strength. Once the numbers come back, we match up with the appraisal, market rent, and the lender signs off on the application. This means that the file is now broker complete and instructions are sent to the solicitor. So Ishpreet, this is your specialty. Take it away.
Thanks, Jessica. So good evening, everybody. My name is Ishpreet. I'm a real estate lawyer with RDM Lawyers. I'd like to welcome and thank everybody for joining us this evening. And today I'll be briefly talking about what role a real estate lawyer plays in your real estate investing journey, as well as some things to look out for in order to be a savvy real estate investor. So in the context of a real estate transaction, a real estate lawyer most commonly gets involved at the closing stage. But in the case of a real estate investment, it's recommended that you obtain legal advice very early on in the process. While the lawyer's role will vary significantly depending on the complexity of the project, a good real estate lawyer will nevertheless take the time to understand your investment requirements and plan and help you maximize your returns by identifying and creating the most appropriate legal structure that fits within your circumstances. So as you can see on the slide there are many ways that a real estate investment can be structured, whether it be personally, corporately, in a partnership or joint venture, trusts, and more. Each structure would be assessed according to the goals and objectives desired from your project. In addition, your real estate lawyer would coordinate and work with your accountant and tax advisors to choose a structure that's the most tax efficient in your circumstances. Lastly, there's also special considerations that must be taken into account when deciding on an appropriate structure if you plan to conduct a land assembly or otherwise consolidate, subdivide, adjust a property's boundary line, and similar matters. So next, a second advantage of obtaining legal advice early on is so that adequate due diligence can be conducted on the property that you're looking to acquire. Typically, one of the primary considerations for a real estate investor is looking at the development or appreciation potential of a particular property. A savvy real estate investor identifies a property that will likely increase in value over a period of time by taking into account various characteristics that a property may have. Therefore, and to this end, in addition to the regular due diligence inspections that you would normally conduct with any type of real estate transaction, there's an added layer of complexity in the context of an investment property. So for an investment property, it's also important to review all legal charges registered against title to the property, as well as make inquiries with the municipality regarding the zoning and the official community plan that affects the property. With respect to the title, oftentimes there are certain covenants, easements, building schemes that are registered against title and that may limit the development options available for a particular property, which is why it's super important to have those reviewed well in advance to make sure that they don't conflict with what you plan to do with that property. For example, in the past, when I've been asked to review the title for clients, I've seen covenants on title that may limit the number of occupied dwellings that are permitted on that property, or I've seen some restrictions that have an outright restriction on subdividing that property. So these are things that could really limit the development potential of a particular property, as well as its future value. So another part of the due diligence is making inquiries with the municipality or the city where you're looking to buy. Municipalities, they're given broad discretion with respect to the use of property and community planning in general. Therefore, it's really important to review the zoning bylaw and conduct related searches and investigations with the municipality in order to minimize risks and expenses to the buyer/developer, because then they'll become aware of the factors that may affect the existing use of the property, as well as the potential development of the lands, and how this would play into their overall plans with the property. So for example, if your plans are to acquire a property to subdivide or build a multi-unit residential dwelling, you would definitely want to inquire with the city to determine if the current zoning permits high density housing to be constructed. And if it does not, then you would want to consider the added cost of submitting a rezoning application, and also if that would be supported by the city's official community plan for the area. So in conclusion, to protect your real estate investment against all of these different variables, it's very important for anyone looking to invest in real estate to retain the services of a knowledgeable and experienced real estate lawyer. With RDM Lawyers, we're a very established law firm. We've been in the community for over 50 years, and we've assisted with thousands of transactions. So the lawyers and support staff at RDM will make it a top priority to respond to your questions in a timely fashion and to ensure that you get the support that you need. This personal approach means that we can better understand your needs and provide practical solutions quickly. So with that, I'd again just like to thank everybody for attending and listening. And now I'll hand it off to financial advisor Brandon Kirk.
Awesome. So now we can celebrate. You have officially closed your deal. You are ready to get your keys. Closing date is fast approaching, and that's where you're going through your transaction sheet, making sure, crossing all of your investments, making sure that it is cash flowing, and now you're obtaining your insurances. So that's where you look at your home insurance as a necessity. But one thing that is often looked over is being able to complete and obtain your personal life insurance to make sure your investment is a liquid asset by choice and not by contract. By this, I mean, if you have no means to pay for the property or qualify for the mortgage or the renewal, even if the property is cash flowing, your family, your next of kin may be forced to sell the property, whether it is at a gain or at a loss. So as well, when it comes to multiple owners, when it's a joint venture investment, a buy-sell agreement allows you to have an easy transition of equity for the deceased party so that the asset percentage is paid out and the beneficiary receives cash versus a percentage of an asset. All in all, life insurance should be a part of every investor's mandatory cost, just like home insurance. And that's where you can have a free complimentary consultation with me to look at, review, and integrate your new life insurance plan for your investment property and for your personal plan. So now we're going to turn it over to our video and our special guest that is with us here today, none other than Mr. Robert Kiyosaki himself.
Do the rich people cringe and say, don't tell them that, Robert?
Yes. Don't tell people what you know.
Right.
Keep them poor. So my father was the head of education, PhD, all that stuff. I go home and ask him, said, why don't we learn about money in school? And he looked at me and says, because the government doesn't let us teach that subject. The government tells us what we can teach and what we can't teach. And I thought that was strange. And I said, but aren't we going to school to learn about money? He says, no, your job is to get a job. I said, but you get a job to earn money. He goes, no, you're supposed to just get a job. I went, no. Isn't the purpose of a job to earn money? He goes, you're correct. I said, so why don't I just learn about money? I can skip the job part, you know? And he got flustered and he said, if you want to learn about money, why don't you ask your best friend's father about money? And I said, why? That's Mike. So why ask him? He says, because Mike's father is an entrepreneur. And I said, what are you? He says, I'm an employee. I'm a government employee. I went, oh, what's the difference? He says, the difference is an entrepreneur must know about money, or they're no longer entrepreneurs. And he says an employee doesn't have to know anything about money because the government will take care of them, the company will take care of them. So I'm all confused. But I took my dad's advice and I trundled over to Mike's father's office and knocked on his door and I said, hey, I'm here, 9 years old. Teach me about money. He says, beat it, kid, you know. But that's where the story of Rich Dad, Poor Dad started. And finally, through persistence, my rich dad started teaching me about money on one condition. And that condition was he would never pay me. He says, the moment I pay you, you think like an employee. He says, that's the trap. Entrepreneurs work for free. And now I'm 9 years old, my head's going cracking in half. He says, you never want a paycheck. You understand that, kid? I said, okay, I got it. And he says, well, how do I make money? He says, that's what entrepreneurs figure out. It's like, so how do I learn about money? So he would just break out a Monopoly game board. So I would work for free. I'd pick up cigarette butts, and he had hotels and restaurants, and I would clean and do menial tasks. And as I got older, I started getting into office work and marketing and accounting, and I was an apprentice basically, but I always worked for free. And he would teach me about money, but the way he taught me about money was playing Monopoly. And finally one day I got upset. I said, well, when are you going to teach me about money? He says, what do you think we're doing? We're playing Monopoly. He goes, no. What do you think we're doing? We're playing Monopoly. He says, what do you think we're doing? So I don't know. I'm teaching you about money. And then that's when, you have one greenhouse. He says, there's many formulas for great success in money. There's thousands of them, but one of the best ones is found on the game of Monopoly. It still is today. 4 greenhouses, 1 red hotel. I said, what? He says, one of the greatest ways to acquire great wealth is playing Monopoly in real life. 4 greenhouses, 1 red hotel. Well, is that all there is? He goes, that's it. And he says, what do you think I'm doing? And I went, I don't know. So then he took me out and he showed me his greenhouses. And 10 years later, when I was 19, I was now in school in New York, and I come back to Hawaii, and Rich Dad had bought the biggest piece of land smack dab in the middle of Waikiki Beach. And when you go to Waikiki Beach today, you'll see the Hyatt Regency Hotel. That was his hotel.
Just like the game of Monopoly.
Just like the game of Monopoly.
Acquired assets and they became bigger assets.
He just kept what's called an assemblage, because that property wasn't that big at the time. So he had to buy out all the small guys. Because Waikiki was a little dirt water little town. So he'd buy out this shop owner and buy that shop owner. And it took him a while, but he finally assembled this large piece of property. And then he and Hyatt put up this giant hotel. It just sold for $800 million. So that's how I learned about money.
Such great information. So now we are going to do a little quick recap exercise, and Brandon is going to walk us through.
I got chills watching that video and just being able to think that we here in Canada get the opportunity to be able to build greenhouses and hotels. And we have a free enterprise system here that allows us to do that. So recap exercise, step 1, getting your money in order. Step 2, get pre-approved. Step 3, connect with a realtor. Step 4, live deal. Now what? Organizing those next steps. Step 5, completing the deal, putting your stamp of approval on it with our lawyer. And step 6, maintain and protect your investment, and how to invest in more and prepare for your next investment and having that succession plan. So thank you for being able to join us here. At this time, we're going to be able to field questions and be able to give answers in the most efficient way that we can. So if you can come off mute, our guest, and be able to answer our questions, I'm going to field the ones on our social media when it comes to our Facebook. So if there's any questions on our Facebook, we'll be able to have that there.
Awesome. And while we are taking questions, we are going to be putting up a slide with our contact information. If anybody needs to reach us, contact us, jot it down, take a picture. This is recorded. We will be posting it after the fact with our contact information. So there we all are, right across the board. But please feel free to ask any questions, pop them in the chat, comment on the Facebook Live, and let us answer them for you. We're just going to take a couple minutes and see if anything comes in.
We don't have Robert Kawasaki's contact information on there, but he was our other guest.
Yes, we don't have his contact information, but I feel if we need to get a hold of him, there's probably a way.
So
Clayton, I'm glad you were able to make it. We can't see you, but glad you made it.
Yeah, this is great. Thank you very much. I appreciate it.
Awesome. Clay, Dan, Laura, any questions here before we do our draw?
No, I'm still absorbing what you guys went over.
I know it's such great information that, sometimes the questions come later. So obviously, if they do, once we post this on social media, please feel free to comment. One of us will respond to you. Same thing on YouTube. If you guys comment questions, we will get back to you and make sure that those questions are answered. And just before we get to our draw, I'm just going to be putting it out there. We will be hosting our next Zoom in our Real Estate Why series, focusing all on first-time home buyers, home buying in general. We will be speaking about it all. Have questions and need answers? Feel like the entire home buying process is a mystery? Please join us. Do you know someone who's wanting to purchase a home for the first time? Are they bombarded with questions and concerns? Let's get them into our attendance, help break down the items they need to know. And we hope to see you all there June 23rd, 2022 at 7 p.m. on Zoom. You will see it online. You register the exact same way and you get to join us again. So why not? So now, Brandon, it's time to draw our winners. I'm going to stop sharing my screen and you can take over. Here we go.
So, okay, so we can all see this perfectly. Visual
It's
is
coming.
All
It's
right.
coming.
There we go. Okay, so for $100 coming up.
Yeah, Laura.
Congratulations.
Yeah,
Yes,
I
Laura.
hardly contain her excitement. Look at that. Yeah.
As someone who doesn't win anything ever myself, I'm just like always so excited when other people are like so stoked because I'm like, yay.
Why would I think it would be me, right?
No,
Thank
you get to
guys.
let
That
us
was-
know where
that
you'd
was-
like it to go. So we'll reach out after and grab that from you and send it on over.
Thank you. Yeah, that was a great presentation tonight, you guys. A lot of information kind of bombarding us, but yeah, lots of great information.
There's so much to know about real estate investing, and it's hard to fit it all into a 25-30 minute presentation. But as we said, if anyone has questions or needs clarification after the fact, we are around. We will be following all the posts as they make their way online. And if you need, to speak with us, you have our contact information. We'd love to talk with you further. So thank you again, everyone, so very much for joining us this evening for our Real Estate Wise series number 3, all about real estate investing. And we hope to chat with you all soon about how we can get you into the market and get you approved. We're really, really excited to work with you guys, and we hope to hear from you soon.
Thanks,
Bye,
guys.
everyone. Have a great
Have a good
evening.
night, everybody.
Thank you
Thanks,
very much.
everybody.
Have a good night, you guys.
Take care.
Bye, Dad.